fun.
Hello and welcome to the Power of Passive Investing. We have a very fun and interesting guest today, Amanda Larson. And Amanda, we're happy to have you here. Why don't you start with sharing with our audience what is it that you do and how did you get to the current point in your life?
Oh, thank you, Alina. It's a joy to be here, and I really appreciate the opportunity to speak with you and your audience, and hopefully provide some insights. So, a brief background on me: I am a recovering engineer, like many investors. So, plenty of years. I have my degree in electrical engineering and worked in everything from construction as a site engineer to design for various engineering companies, all the way into I got involved in consulting as a um, expert witness for engineering projects. And in the meantime, started investing in real estate. I grew up in a family that believed in real estate, owned single family homes, was that landlord investor. And so I never thought I would dive into that space, but bought my first investment house in 2010 during the financial crisis. And bought a couple more single family homes, and then stumbled upon this wild thing called passive investing. And it happened by chance. I was at a meetup in Houston, where I live now, and learned that there's this way that you can invest in real estate and get the benefits, the cash flow, the appreciation, without the drama and the headaches of dealing with the house and the repairs and the tenants and all that comes along with it. And so since then, that was in 2018, 2019 timeframe, started investing passively in multifamily, and just honestly, I wouldn't say fell in love with it, but I really liked it. I grabbed hold of it and decided that I wanted to be more than a passive investor. I wanted to get onto the active side. I love the opportunities that it provided and the people that were in the space. And so, yeah, dove in since then, and now it's what I do full time. So,
Amazing. Love it.
yeah.
So, did you leave your W-2 job on your own?
Nope, my W-2 job left me.
In the
But
same
that
boat.
wasn't, sorry.
We're in the same boat. That's
Yeah.
what happened to me.
Yeah.
Please continue.
Um, but I think that was part of my reason why I wanted to get involved. So it wasn't the first time my W-2 left me. And in the oil and gas space, it is a cyclical industry, cyclical market. And beyond just all the benefits of real estate, I decided after the first time that I really needed something else behind me, because it can happen to anyone at any time. And no matter what, it is a stressful situation. If you're going through a layoff or downsizing, even if you don't get laid off, it's really stressful. But I can say that if you have something else working for you, it's way less stressful. It is
Yeah.
hands down. And so that's one of the reasons why I started investing more, and really what drives me is to give people that backup plan, that safety net, that plan B. So when life does happen, whether it's downsizing, divorce, disease, whatever it is, that they have that working for them. And that is so empowering. I just can't even describe like what it can do for you, for your emotional, mental well-being, if you have that working for you.
I love it. Thank you for sharing, Amanda.
Yeah.
You mentioned that oil and gas industry is cyclical. Real estate also happens to be a cyclical industry,
Yeah.
and as we know it, it's going
Mhm.
through the iterations of that. And it used to be up and up in
Up.
early 20, and then the slowdown, and now with the new administration and tariff wars, we still don't know what's going to happen, and which tariffs are going to go into place or not. But with real estate being cyclical, can you please share how do you approach that, and how do you decide on a particular opportunity when you're
Yeah.
moving forward
That's
on?
That's a great question because there is a lot of uncertainty right now in the market, I would say.
Sure.
Um, I would say I think no matter what phase of the cycle you're in, the fundamentals matter. So you're always looking for the strong markets with population growth and where you can, if it's not a complete recession, some job growth. And even in a recession, I think recessions can hit different markets differently. And so you're always looking at those fundamentals. And I strongly believe that real estate over time won't fail you. So as long as you're not forced to sell, if you have the right debt to get through a cycle, to get through the downturn, if you're not over leveraged and you can cash flow, real estate is extremely robust compared to other asset classes. And so it really comes down to when you get caught is when you get into a situation where you're forced to sell at the wrong time. And so understanding that and understanding the business plan, understanding a little bit about interest rates, because I think it might be an unpopular opinion right now, but there is a time and a place for variable rate interest. If you have that risk profile, I wouldn't say it's for everyone, but if you understand it and you want to take on that additional risk, you can take variable rate. But long-term debt can, 10-year debt, real estate, multifamily in particular, can take on fixed rate 10-year debt, no problem. And that will get you through most cycles, I feel.
Yeah, excellent answer. Let's talk a little bit about the asset classes that you concentrate on. For example, my target asset classes are triple nets, which includes offices, medical, flex space, retail, industrial, and so forth. What is your preferred asset class, and tell us why?
Yeah, so I am in multifamily, so apartments. I love it. I like it because everyone always needs a house. The retail, I'm not as familiar with. I'm just not as well versed in. I don't understand the triple net. It's not something I've studied, and it's not something I feel like business owners don't always need. Like business owners can go out of business faster than people can go homeless at that. I mean, that's very extreme, but
Sure,
um, it comes down to people need houses, people need roofs, and the government knows that they don't want people without a home, and so it's supported. There's favorable debt that you can get with multifamily. And I'm not saying that there's definitely opportunities in every asset class. It's just what I chose to focus on and what I know the most about right now.
got it. Awesome. And we as humans tend to choose something that we're more comfortable with.
Mhm.
I personally, when I immigrated to United States over 30 years ago, I lived in what we now call workforce housing, so very familiar with that asset class, and can relate to your experiences. I mean, I don't
Mhm.
know if you're concentrating on a workforce housing or
Mhm.
maybe higher B plus to A or A minus, more of a luxury apartments, but the demand for workforce housing has definitely been prevalent throughout my life journey, and I'm sure it will continue as we always have a
Yeah,
shortage of housing.
yeah,
Is that what
yeah.
you've seen as well?
That is, and I think there's like I really like the kind of I'm gonna call it a B class. So right now that's a nineties build, kind of middle of the lane. And I think there's opportunities on every spectrum, but that seems to be where, people can move up and move down and people end up landing in that B class, still stable, still strong, can afford to pay rent. Um, kind of space. And so we're not going for super affordable, but we're also not going for high-end luxury. And I think that's where some new investors, not to go off on too far of a tangent, but a lot of I see a lot of new investors want to invest in something that where they could see themselves living.
Sure.
And
Yeah.
that's a hard bat, like getting over that you're providing a house, you're providing a roof over somebody's head that really needs it. We're not asking you to live there. You're providing a service, honestly. And
Of course.
so people can get distracted by the shiny object, like the literal shiny object of the new luxury class A apartments. But it's just, I don't find it as robust. I don't think the opportunity is there as strong as more of a workforce housing. So yeah.
Absolutely, makes perfect sense. So Amanda, when you first personally started investing, maybe share with our audience, what was that experience like? Were you scared? How were you deciding what investment to select and why? What was going through your head, so that our audience can understand if someone is in that situation
Yeah.
now that they're approaching being a brand new investor and thinking
Mhm.
about potentially taking that first leap of faith, that first step that's the hardest,
Yeah.
investing in their first real estate project.
Yeah. The first step is always the hardest. I think I'm a maybe a little bit of a unique case, so I can tell I already knew that I wanted to invest in real estate, and I thought that I was going to end up buying a lot of single family houses, and I was doing it almost begrudgingly,
Mhm.
thinking, I'm gonna have to deal with all this work on the side that I've already had my career going, and I enjoyed my work. And so when I learned about passive investing, I almost sold myself on it. Like you didn't really have to sell me. I already knew. I was like, this is an amazing opportunity. You get to, it's an asset class that I like. But in terms of getting more comfortable with it, I think one of the best things new investors can do is find somebody who's a few steps ahead of you that has the time and ability and willingness to help walk you through and educate you and answer questions. And I was fortunate. When I went to the meetup where I learned about it, this group was kind of just getting started. They had done a deal or two, and now they've exploded. But they had the time and the bandwidth to answer all my questions, and they could be as silly as they were. I was trying to underwrite deals. I was asking about debt. I was asking about what the difference was between a yield play and cash flow play and different markets and visiting deals with them. And so really just finding somebody who can mentor you and educate you and get you comfortable because you as a passive investor, your only job is to understand what you're investing in. Like that is your number one job, so you can invest with confidence and clarity.
Absolutely. Amanda, you mentioned a great point about finding a mentor or a
Mhm.
coach, essentially someone who has been around the block and
Yeah.
can guide you through the process. And in my own coaching program,
Mhm.
help uh, people that are new to real estate to become more sophisticated in their investing,
Yeah.
and take the shortcut, if you will, and kind of follow the process that I went through personally in my own journey. But I would love to hear from your experience. How did you find that person in your life, or maybe it was multiple people
Mhm.
that guided you through the process and help you through this? How did you find them, and what kind of impact did he or she make on you to continue with this journey?
Yeah. So there's been multiple mentors and coaches through my journey. The first one was the I attended a meetup and stumbled upon this, and I met them, and then through that meetup I met multiple people doing the same type of stuff. And so really just putting yourself out there. There's opportunities now that weren't available in 2019, so that we have a lot of LinkedIn, and that's where we met, Alina. And so a lot of people on LinkedIn are willing to put out resources and coaching programs. There's local meetups that every major city will have a meetup that you can attend.
Yeah.
I also signed up. I joined a formal mentoring program. So that was part of my journey and helped me tremendously, especially now that I am more on the active side. I think that was incredibly valuable. I don't know how I would be where I am now without a formal coach, because
Sure.
as much as friends and relationships can help, a formal coach is there when you need them the most. And so a
Absolutely.
friend might want to pick up the phone, but if a friend is busy when you really need them, somebody who is you have engaged as a coach specifically will pick up the phone no matter what. So that's really valuable.
100%. And
Mhm.
Amanda, you brought a very, very good point, and it reminds me of my one of my mentors, Warren
Mhm.
Buffett. I'm a big believer in Buffettology, if you will,
Yeah.
in his teachings. And I mention him every time I have this opportunity. I even mention him in my TED talk that I did last year. One of the things that Warren Buffett teaches us is that you're the greatest asset that you have. And in order for this asset to develop, you need to continuously improve yourself and invest in yourself. Why? Because you're the best investment there that
Yeah.
available to you. So when you look at the coaching program as an investment and what kind of return do I get on that investment, you're essentially opening doors to a lot of opportunities down the road, as opposed to saying, oh, this coaching program costs a lot of money, I can't afford it. Uh, Switch the question, turn your mindset to saying, how can I afford this program so that I can get from point A to point B faster with someone who's done it before, and it'll be instrumental in improving your life journey. And it sounds like you're
Yeah.
true a testament to that. You said this
Mhm.
coaching program has helped you to escalate your program progress.
Yeah.
Did it not?
Oh yeah, 100%. I wouldn't be here without a coaching program. And I've continued to sign up for coaching programs. I think I've probably spent more money on coaching programs than I did on my undergrad and my graduate program combined. So
I'm familiar. I've probably done that too. Uh, can you share with our audience some of the benefits that you've gotten from these coaching programs that you invested in?
So I think there's two sides of it. So you get the program itself, the the education. Usually there's a formal education piece to it, to learn the nuts, the bolts, the spreadsheets, the whatever it is, the market analysis. But then there's also this group of people that are on the other side of it, and you get to have the opportunity to meet people who are having the same challenges, the same struggles, are a few steps ahead of you that can help you get through the challenges and struggles, because
Of course.
all the nuts and bolts, I mean, you can generally find a lot of that on YouTube or online or whatever, but
Sure.
it's the resources and the people behind it is where the real value comes in. And so I think when you're exploring mentoring programs, or when people are, get to know what the mentor, like find a connection with the person in charge, and then also talk to people who are, are maybe part of that program, and see if it resonates with you, because you're paying for the full package is what you're
Yeah.
getting. And so you really want something that speaks to you almost. I mean, that sounds a little bit woo woo, but it does. Like some programs will speak to you and some won't. And so just look into it, take
100%.
your time. Yeah.
Yeah, I love it. And not only the program, but the coach and the mentor herself or himself,
Yeah.
you need to speak with them to see if that's the person that you'd like to work
Yeah.
with and follow to, because there may not be a rapport between the two of you.
Yeah. There might not be a connection. And
Yep.
so it's really important. Like you said, it is an investment. And to get the ROI on that investment, you need to like resonate with the program, and then also understand that a program or mentoring program isn't like a silver bullet either. Like there's still work
Yes.
involved, which
I
is
love that you mentioned that. Go ahead.
Yeah, which is also where I see people, they join a program and they think it's all the problems are going to be solved for them. And
Exactly.
it is like you get out what you put in. And they're the mentor, he or she is there to provide the resources and help you hold your hand and give you confidence a little bit, but they can't do the work for you. And so that's that's probably the biggest thing that I see in mentoring programs. It's the 80-20 rule will always apply.
100%. And there's no magic wand. The
Yeah.
work is not going to be done magically on your behalf. You still have to do all of the work that's
Yeah.
provided to you, the homework. Sure.
Mhm.
Excellent. Love it. So, Amanda, share with us, how do you approach finding the projects, or maybe locating specific geographic areas where you want to invest?
Mhm. So I'm in Texas, which is a good market on its own. So for the last few years, I've been focusing on Houston, Dallas Fort Worth area, and San Antonio. And I'm starting now to look a little bit more to the Midwest, not seriously, because I think Texas still has a ton of opportunity. But I think as a starting point, it goes back to those fundamentals. It goes back to population, job growth, diverse industries, the strong or the like landlord friendly, business friendly policies. Um, Price per door comes in with multifamily. Where are they at in the cycle? So I would say for me right now, it's still Texas primarily, but I'm opening my view to other markets.
Excellent. When looking at the deals, obviously every opportunity, regardless whether it's real estate or stock market or any other industry,
Mhm.
has its pros and cons. So when evaluating multifamily opportunities, um, how do you evaluate what are the pros and cons to a deal, and how do you decide whether the pros outweigh the cons, and essentially going and taking on the deal or investing in the project?
Yeah. Well, I think there's a couple different components. So it starts with the operator. Uh, Ideally, I'll know the operator personally, and I'll have a track record with them and understand who they are, what they're about, and have that trust component. And then, and if not, like I want to get to know them first and talk to other people who have invested with them. I think talking to other investors is one of your best resources when it comes to evaluating an operator. And it's not the people that they tell you to go talk to. Go find other people. It's a small industry, so go find people who have invested with them and what their experience is. And then, I underwrite the deal. I throw in a spreadsheet, and if it makes sense, I have my, all the metrics. You can get everything for free online. You can get rent growth in the area, all the competing apartment complexes. You can see what they're charging for rent. You can see what's possible. You can look at projections in terms of rent growth, and so the numbers will really tell you like yes or no. For me anyway, that's follow the numbers, and the numbers will tell you what to do type scenario.
I guess as a former engineer, you are the numbers person, and that's why
Yeah.
you enjoy looking at the numbers.
Yeah.
Amanda, for someone who doesn't have the analytical background or doesn't like looking at the numbers, what would be your suggestions? How would such person approach evaluating deals?
Then it comes down to finding somebody who you trust that can evaluate the deals. I would say if you are investing through like there's different term like a co-GP opportunity or fund of funds, you just ask, have you underwritten this deal? Have you done the numbers? Because if you're the passive investor who doesn't want to, doesn't have the knowledge, doesn't have the time, you need somebody who has. And so you want to trust that somebody has ran the numbers, and that you trust that their ability to run the numbers, and you trust that they understand the growth potential and their, the risk involved, and that they're not over projecting, rent growth in the area, and just ask some simple questions like, what are you projecting? How much are you projecting rent to grow? And what if it doesn't? What happens if that doesn't happen? Will
Right.
we still cash flow? What happens if you can't do X, Y, and Z? What's the downside? What's the risk? So it comes down to relationships.
I love it. Amazing. Thank you for sharing that, Amanda. Um, while you were describing how to evaluate the deals, you mentioned the operator a few times.
Mhm.
So how critical was it for you to personally meet the operators and get to know them better?
So far I've had I've been not lucky enough, but so far I have only invested with operators that I know personally. I'm not saying that that's always going to be the case, because I think there are really great operators out there who aren't necessarily based in Texas. But then it comes down to building a relationship with them somehow, or through someone who does have that relationship. At the end of the day, I feel like investors should know who's actually running the deal, who's actually in charge, and what their track record is, and what their investing thesis is, like why somebody should invest with them, and what they believe the opportunities are. So it all comes back down to, it's a numbers business, but it's also very much so a people business.
100%,
Yeah.
100%. So in terms of it being a people business, curious when you bring investors to the deals, what are they typically saying, you investors? Why are they investing with you as opposed to that other guy across the street?
I think it just people resonate differently with different people. I think I can communicate some things, and I'm not for everyone. I'm not saying I am, but I you either click with somebody or you don't. And when you're working with a co-sponsor or co-GP, you need to be comfortable asking them questions, and that person needs to be able to answer your questions in a way that you understand. And so you have to resonate. People often overlook when things are going perfectly and swimmingly, whatever, things are great, but these deals are 5, sometimes 7 years. And so that's a long time to stay in touch and stay in contact and build a relationship. Like, you need to be able to go to them and say, hey, what's going on with this, with my investment? What's happening at the property? What's going on with occupancy? And so having somebody that you feel comfortable with, that can answer your questions in a style that makes sense to you, is really important. It's kind of like having a teacher, or similar to our coaching discussion earlier, you need to have somebody that you can click with and that will be there for you when you need them.
Makes sense. Yeah, absolutely. And as you said, Amanda, deals don't always go as planned. So,
Mhm.
curious, from your experience, have you ever seen the deals going south, and how did you handle that?
I think there's, right now there's quite a few deals going south. We have most of our deals are on fixed rate debt, so it's not a problem. We do have one deal that is on a variable floating rate debt, and we did just renegotiate that debt, so we're doing fine now. But transparency is key, so our investors know exactly what's happening. We send monthly updates. We send all the challenges, all the good news, all the bad news. Everything goes into the report, and so our investors know everything. And I think being up front at the beginning, that things don't always go as planned. And I find that experienced investors know that better than the newer investors. Like, experienced investors understand that there's cycles and there's things out of everyone's control. Like, no one would have thought no one would have predicted interest rates to do what they've done in the last few years. We've also had a supply, like a huge amount of supply come online in Texas. So, we're fighting with that battle. But we talk about it when we're open about it. When occupancy dips, we talk about it. We say what we're doing to solve the problem. I think that's also a really important piece. It's not just to say that, hey, we've got a challenge. What are we doing to solve that challenge? Like, how are we being active
Yeah,
and being good stewards of people's hard-earned money? Because it's not a small amount of money that people invest, and you want somebody who's going to take that seriously and do everything they can to protect that investment and grow it where possible.
absolutely. Absolutely. Love it. Thank you for sharing with us, Amanda.
Yeah.
At the end of each interview, we typically ask two personal questions. One is, how can our audience connect with you? Where can
Mhm.
they find you?
Yeah. You can go to my website. It's amaxequity.com. That's amaxequity.com. And you can sign up for my investor club newsletter. I won't bombard you with email, I promise. It's like an email every 2 weeks. I also have some free resources. I have a beginner guide for passive investing, due diligence checklist, and a couple of other things on there. You can also hit me up on LinkedIn. It's Amanda Larson on LinkedIn. Either one.
Awesome. Thank you for
Yeah.
that. And the last question that we ask our audience is, how do you like to give back to your community or to folks at other areas? What do you do to give back?
To give back. Yeah, so to my investing space, I try to educate as much as I can. I'm really just a resource to help people get started. It starts with education. If people invest with me, don't invest with me, it's all fine. I'm not for everyone. So educating. And then I'm also involved, non-investing. I'm involved with a group called Red M, which supports or tries to end human trafficking. So
Very nice.
mhm.
Thank you for doing that. That's a huge effort.
Yeah.
Thing. Amanda, thank you. It's been a great interview. We very much enjoyed it. I'm sure our audience will enjoy it as well. And until next time,
Yeah.
goodbye.
Thank you so much, Lena. It's been a pleasure.